The ones that make money in the market are the ones that have the discipline to stay in not only during the good times but also during the bad times.
As Wall Street downturns continue creating panic, investment professionals are weighing in. Good evening, I'm Brendan Morano. It's been a tumultuous last 5 days for U.S. investors. Market volatility and uncertainty came after President Trump's unveiling of mass reciprocal tariffs on nearly 90 countries worldwide. And now both the NASDAQ and Dow Jones have seen the unstable impacts of overall investor anxiety. WCI3's Jack Crum is in our newsroom. Jack, you talked to some financial experts today. What did they have to say?
Brandon, the message between the two that I talked with remained consistent. They're advising their clients to hold steady and do not sell into uncertainty. They say despite the current state of the market, it always smooths out with time.
It's not that extreme yet, but so much of the decline happened in 2 days, last Thursday and Friday. So I think that got people's attention.
Last week's global tariffs created a several-day stretch of market panic for some U.S. investors, with major indexes falling hard amid fears that U.S. tariff policy could hurt economic growth, raise inflation, or even trigger a recession. Now into this week, a majority of investors remain shaky.
Obviously, it's a little bit scary for our clients, for everyone, when they see the market decline somewhat rapidly.
David Rudy is the vice president of Rudy Wealth Management and a financial advisor. He says his advice to his clients has been to control the controllable.
One of the things we can control is our behavior. So making sure we don't panic in times like this, doing things like rebalancing client portfolios back to their target percentages, tax loss harvesting, potentially Roth conversions. But frankly, the most important thing is just providing that reassurance to clients that they often need in times like this.
Daniel Holder is the CEO of Holder Wealth Management. His advice for every market downturn has remained the same. Don't sell into the madness.
Right now, all we have in the brokerage account is a paper loss. We don't have any real losses. When we sell that, those losses become permanent, and highly unlikely we'll be able to recover that loss. Whereas if we hold steady when the market rebounds, which it always has, there's never been a permanent decline in the stock market, we'll get back to where we were.
And for different age brackets, the outlook changes.
For young people, this is a good thing. Just continue saving and investing. If you can cut your spending a little bit so that you can save and invest even more, that's a good thing. And then for retirees, just all of the things that I talked about, rebalancing, monitoring your plan, and just trying to stay calm, cool, and collected.
Now, Goldman Sachs has raised the probability of a U.S. recession to 45% due to the mounting tariffs. Brandon?
All right, Jack, thank you. On Thursday, the S&P 500 and the NASDAQ had their biggest two-day drop since the beginning of the pandemic in 2020, with Dow Jones also taking a major hit. As of Monday, NASDAQ is up 0.6% and Dow Jones has rebounded 0.2%.